As I said before, keep your eye on one thing and one thing only, how much government is spending, because that's the true tax. Every budget is balanced. There is no such thing as an unbalanced federal budget. You're paying for it. If you're not paying for it through it in the form of explicit taxes, you're paying for it indirectly in the form of inflation or in the form of borrowing. The thing you should keep your eye on is what government spends. And the real problem is to hold down government spending as a fraction of our income. And if you do that, you can stop worrying about the debt.
5 genius assets to own in order to protect your wealth against inflation and currency debasement. Hello everyone, my name is Vandell, co-founder of Black Swan Capitalists. Today we're diving into an important topic. I specifically want to talk about 4 types of assets that outperform cash, real inflation, and currency debasement. While cash may seem like a safe haven and a reliable option for most people, it's actually not. The reality is that the US dollar has steadily declined in value over the years, thanks to central banks creating money out of thin air. That's actually destroying your buying power more than you can imagine. Now, inflation has literally eaten away at its purchasing power, making it less effective for long-term wealth preservation. It just doesn't work anymore. So, we need to invest in assets to avoid losing wealth and do exactly what the wealthy people do. As central banks keep printing money, fiat currencies continue losing purchasing power. Now, before 2019, the money supply was growing about 8% annually. But since 2020, it's risen to about 10% annually and will likely continue increasing over the years. Now, the elite oligarchs want to keep you poor and keep you at the bottom of the food chain. They want to keep you at the bottom of the hierarchy, and the wealth gap between the have-nots and have-yachts is actually growing faster than ever, which means more people who continue to struggle financially and fewer people that are well off, with even fewer people in the middle class. That's what's taking place right now, and that's what will continue to take place. In fact, historical data illustrates just how severe the devaluation has been over the years. To put it into perspective, a $1 from 1980 now holds only a quarter of its original value. What does that mean? It basically means that $1 can now only buy you 25 cents worth of stuff. And this is according to the US Consumer Price Index. The purchasing power of that same $1 bill has diminished to just 25 cents. Now let me repeat that. In other words, $1 US today holds only a quarter of the value it once had. That basically means that 75% of the dollar's purchasing power has eroded over the last few decades. This just shows you how just holding cash is actually much riskier than actually taking a risk and buying assets if you're interested in preserving wealth. If this is difficult to comprehend, then you'll want to shift your mindset and the way you look at things in the world. Once your mindset shifts from a buyer to investor, you'll actually never look at money and investing the same way. And please understand that material possessions are not a sign of wealth. It simply means that you have less money now because you bought more stuff. Wealth is built by owning assets that appreciate in value. So if cash isn't the answer, then what's the solution to get ahead financially? The answer is simple. It's buying assets with the dying fiat currencies that you have. So in this video, we'll talk about 5 assets that historically have outperformed cash, offering not only a hedge against inflation and currency debasement, but the potential for real exponential growth against currency debasement, which is a big difference from just breaking even. Let's take a look at these assets and how they compare. Now, these comparisons are not ranked in any specific order. I'm just going to outline them. So the first is cryptocurrency and digital assets. I believe this is the most lucrative opportunity on the face of the planet that we've ever seen. I mean, literally, ladies and gentlemen, we've never seen these kinds of returns that cryptocurrency and digital assets offer in any other asset class in existence, especially when it comes to building wealth in such a short period. It's truly an anomaly. Now, crypto stands as the number one asset class to actually outpace currency debasement. And there's a few different reasons why, but primarily it's because it has the strongest sensitivity and correlation to money printing and the global M2 money supply. It's not only the best performing asset in existence at the moment, but also delivers the best risk-adjusted reward, presenting a once-in-a-lifetime opportunity in my personal opinion. Now, here are some examples just for reference. Ripple XRP, this is just an example, in 2013 was trading at 0.005 cents. Fast forward to 2018, it jumped up to $3.84 before it went back down. That was a return on investment of 76,000%. And the crazy thing is, it hasn't even gotten started yet, and utility hasn't even fully kicked in on a global scale yet. So imagine what the price is going to do by that time. We're very early. Approximately only 6% of the entire world has a crypto wallet or some cryptocurrency. Velo, in 2020, it was worth 0.005 cents. Fast forward to 2021, that's just a year and a half, it's worth $2.38. So it went all the way from 0.005 in 1 year to $2.38. That's a significant return. That's a return on investment of 47,500%. Incredible. SHX, another example. In 2020, it was worth 0.0004 cents. Fast forward 1 year later to 2021, it's worth 0.012 cents. That's a return on investment of 2,900% in 1 year. Bitcoin, in 2010, it was worth 0.01 cents, of course, really insane. Fast forward to 2021, it's $69,000, all-time high. Anyway, the return on investment on Bitcoin, if you really got in early, I don't advocate for it, but I advocate for getting in different assets early. But Bitcoin did 69 million% over the decade, which is insane. Now, these examples illustrate the immense wealth building opportunities and potential that crypto offers. The ability to turn small capital and investments into life-changing sums in really such a short period of time. No other asset class can do that as of now, and it's something that's completely unheard of in traditional markets, which makes cryptocurrency and digital assets the most rewarding asset class to date. Another thing to mention about crypto is if you compared it to the internet, the growth S-curve, the growth adoption is actually growing at a faster rate than the internet was during the dot-com era and in the early 90s. So it's remarkable, and it just shows you how early we are. And the remarkable part really is this is just the beginning. We don't even have global mainstream adoption for cryptocurrency, blockchain technology, digital assets, and we don't even have full-scale utility yet. So imagine what will some of these digital assets be worth and these valuations by the time we get there. Something to think about. And most of my portfolio is strategically allocated towards digital assets and cryptocurrencies currently, and reflecting such a high conviction that I have. Now, let me know if you'd like me to make a video on the principles that make up my investment philosophy. I'll be happy to do that. The second one is gold and precious metals. I believe there are some compelling reasons to consider buying gold and precious metals in general. I'll give you a few reasons, and I'll show you how the data looks so that you can have a better sense of how it's held up against currency debasement and inflation over the years. Gold is 100% real money and has been around for over 5,000 years. So it has a pretty impeccable track record. I don't consider it an investment, but an insurance against a dying fiat currency and the US dollar, which is exactly what's happening right now if you pay attention to the geopolitics and the monetary and financial reset that we're literally living through. Secondly, I personally believe a gold revaluation is on the horizon. This is just my opinion. It's basically where central banks will significantly raise the price of gold, and I believe this will be done to restructure the global debt. It's something that has been done before, most notably in 1934. So it's not like they haven't done it, they have in the past. Interestingly, Warren Buffett once said, if you own 1 ounce of gold for an eternity, you still own 1 ounce at its end. It will never produce anything. You can fondle it, but it will not respond. And that comment is very interesting because while that's true, gold's value lies not in its productivity, but in its ability to hedge against inflation. Even though gold doesn't produce things, gold is used in production. So even though gold itself doesn't generate income, it remains highly sought after, not only for industrial use, but increasingly by central banks as a reserve asset. Why else would the central banks become net buyers of gold since 2010, purchasing every single year at record levels every year? Why? For what? Do you think they just like to collect it for fun? No, of course not. They know the end of the system was in 2008, and they've been preparing for it since. The preservation of value is undeniable, and here's some data for you to have a different perspective and see it for yourself. In 1929, 10 kilograms of gold bought one average home. Fast forward to 2024, that same 10 kilograms of gold now buys 2 average homes. It's an anchor and a measurement against all things. This clearly illustrates that while home prices in US dollars have soared due to the weakening dollar and printing money currency debasement, the purchasing power of gold has remained constant and even increased. As a matter of fact, gold ensures your wealth stays intact regardless of currency debasement, unlike fiat currencies which lose value over time. So, something to consider. Now, I know gold may not offer the cash flow of rental properties, but it serves a different purpose, in my opinion. It's real, enduring money, and if it's good enough for central banks to stockpile, it's really good enough for me. Ladies and gentlemen, if you're interested in buying gold or silver to preserve your wealth against inflation and dying fiat currencies, or even get some guidance on what's going on in the world and get more information on gold, just get in touch with our partners at ITM Trading, and they do offer a free strategy call, no obligation. Link in the description. Stocks have consistently proven to be one of the most effective tools for building wealth and protecting your purchasing power against inflation and currency debasement. On average, the S&P 500 index fund delivers an annual return of between 7 and 10% after adjusting for inflation, and that really helps investors grow their wealth over time while keeping up with or even beating inflation. Now, for example, if you had invested $1 in the S&P 500 in 1980, that same investment, that $1, would now be worth $55. With dividends reinvested, it could be worth about $170. There is a lot of growth potential there in stocks, and specifically individual stocks can generate even more remarkable returns. For example, a $5,000 investment in Microsoft back in 1990 would now be worth over $10 million, and that just showcases the extraordinary growth potential that some of these stocks and companies offer over time if you invest in the right ones. In addition to value appreciation, many stocks pay dividends, which can be reinvested to further compound your returns, and that's extremely powerful when it comes to investing. These dividends are often taxed at favorable long-term capital gains rates, or in some cases, they're not even taxed at all. So something to consider. And if managing individual stocks seem too time-consuming or costly due to mutual fund fees, investing in a Vanguard index fund that tracks the S&P 500 is simple. It's a low-cost option, and there's some great options out there, such as funds like VFIAX, which is Vanguard 500 Index Fund Admiral shares, and VOO, which is Vanguard's S&P 500 ETF, and they have historically delivered strong, reliable returns without the need for active management. And these funds allow investors to benefit from market growth with minimal fees because nobody's managing your investments, making them a great hands-off approach for long-term wealth building. And that's actually one of the first investments I made many years ago when I got into the markets. Real estate. So let's compare holding $1 from 1980 to having $1 in real estate in 1980. So if you had $1 in real estate in 1980, that same $1 would be worth approximately $4 today. This is based on the Case-Shiller Home Price Index, and additionally, rental income has grown significantly. So if you had rental income, your rents would be now worth about $5.29. The value of properties has quadrupled, and rents have increased over time, compared to the dollar losing 75% of its value. But at the end of the day, you never want to be buying at the peak of the market cycle in any asset class, because historically every bubble eventually bursts. Even though it might turn into a bigger bubble, and an even bigger bubble, eventually it does burst or has a significant pullback. So it's something to take into consideration. In 2019, the median home price in the United States was about $258,000, which was an all-time high at the time. And today, the average sale price of a sold home in the United States is $501,000, while the median home price in the United States is $412,000. We're literally talking about, in 4 years, home prices doubling, which are almost $500,000. So that's crazy. And I believe some areas are in an extraordinary bubble, in my opinion. But historically, properties have done very well over time against inflation. All four of these options are far better than holding large amounts of cash and are worth considering. However, the right choice really depends on your financial situation, your risk tolerance, and your age. Cash still plays an important role as a medium of exchange for everyday needs, buying essentials, paying rent, and covering bills. It's also useful to keep on hand for emergencies and for buying assets when prices drop, because all these assets we talked about, you have to buy them with the medium of exchange, which is the fiat currency, cash. Holding too much cash in fiat currency can actually mean missing out on better opportunities, and inflation and currency debasement will steadily eat away at your purchasing power over time. So if you guys like this video, let me know. I'll be making some more of these. Thank you. I'll catch you next time.